And the top story this morning, 2025 has been a defining year for India's growth, even as the world economy struggles to keep pace. Now, as per a government release on the 29th of December, India has officially overtaken Japan to become the world's fourth largest economy with a GDP of $4.18 trillion and is poised to displace Germany from the third rank in the next 2.5 to 3 years, with projected GDP of $7.3 trillion by the end of this decade, that's 2030. Now, the growth momentum further surprised on the upside, with GDP expanding to a 6-quarter high in Q2 of this financial year, FY26, reflecting India's resilience amid persistent global trade uncertainties. Domestic drivers led by robust private consumption played a central role in supporting India's GDP expansion. Meanwhile, high-frequency indicators point to sustained economic activity. Inflation remains below the lower tolerance threshold of the RBI of 2%. Now, unemployment, according to the government, is also on a declining trajectory, and export performance continues to improve as per the government statement. Now, remember, India's real GDP grew 8.2% in the second quarter of this financial year, FY26, accelerating aggressively from the already high 7.8% in the first quarter, that's Q1, April, May and June of 2025, and 7.4% in the last quarter, Q4 of the last financial year. Now, this was marked by the 6-quarter high that we saw in Q2 numbers. Now, this was also led largely by resilient domestic demand amidst global trade and policy uncertainties. The RBI had revised India's GDP growth forecast for FY25-26 upwards to 7.3% from the earlier estimate of 6.8%. India's domestic growth is on an upward trajectory owing to multiple factors such as robust domestic demand, income tax and goods and services tax rationalization, softer crude oil prices, front-loading of government capex, along with facilitative monetary and financial conditions, supported, of course, by the benign inflation numbers. Global agencies too have echoed this optimism. The World Bank has projected India's growth of 6.5% in FY26, while Moody's expects India to remain the fastest growing G20 economy with growth of 6.4% in FY26 and 6.5% in FY27. Looking ahead, domestic drivers like favorable agriculture prospects, sustained effects of GST rationalization, inflation continuing to be low, and strong balance sheets of corporate India as well as financial institutions, coupled with supportive monetary and fiscal conditions, are expected to continue bolstering the economic activity for India. Now, external factors such as services exports are projected to remain robust, while the swift conclusion of current trade and investment negotiations offer additional upside potential. Ongoing reforms are likely to further enable growth prospects, according to the government. The present macroeconomic situation presents what the government calls a rare Goldilocks period of high growth and low inflation. On the external side too, foreign direct investment captured great momentum during the first half of this financial year. For the time frame of April to September 2025, vis-a-vis the same time period last year, gross FDI grew by as much as 19.4% to $51.8 billion. Net FDI, meanwhile, increased at a much more handsome 127.6% to $7.7 billion. The significant increase is attributed to a decline, in repatriation, despite a rise in upward FDI. The government says India is on a path towards its goal of becoming a high middle-income country by 2047. But do remember, the United States remains the world's largest economy, followed by China at the number 2 position.